on the digital initiatives LIC is likely to take and form a fintech arm. Now, a lot of people are drawing parallels how SBI, people had written off SBI and then they came out with a spectacular subsidiary called YONO, and now that itself is garnering almost $40–50 billion worth of valuation. Similar case happened with Bob Worth as well. Do you think LIC would be able to create value in their fintech arm, the DIVE initiative which they are taking, and create value for shareholders overall?
Absolutely, Ajay. I think this is one initiative which, probably they should have taken a few years back. We know that, private sector competition is intense. LIC has been, in all fairness, losing market share to the private competitors. And this has been happening over the last 5, 7, 10 years almost. So it's absolutely necessary and critical for LIC's long-term survival and prosperity. As I said, I wish this initiative was taken a while earlier, but nevertheless, finally it has been taken, and hopefully this will lead to transformation of LIC, rejuvenation of its operations and systems. Definitely the new millennials and the younger generation will start getting attracted, provided LIC can provide a seamless experience. Unfortunately, that was missing. The trust, because it's a government-owned company, government-owned insurance company, the trust was always very, very high. And, we all know, even the remotest corner of the country, we have an LIC agent. So the comfort, trust, that part was there. But the ease of doing business was definitely missing, and that needs to be brought in. So this tech initiative, whatever name you call, needs to transform the organization. And if it is able to do that, I'm sure LIC will be a formidable force once again. And it will be very, very difficult for the private players to, snatch market share after that. That's my reading of this. And as I said, it's a very, very welcome initiative. Even from a stock market point of view, we know what happened post the LIC listing. It continuously lost value, and there was no way for the government. They were committed to divest more stake as a part of the listing arrangement, but unfortunately, LIC was not in a position to facilitate that. Hopefully, all that should happen, and LIC will start becoming attractive for market participants as well in the near future.
Let's analyze the charts of LIC, because this has been the disappointment since its IPO. Then, of course, from those lows of 520, what did you say was the low? 550 thereabouts. Yeah. From there, it's had a mammoth recovery. What now?
So I think now it's just a starting move for LIC to try and get into recovery, because 2 straight months of price action from 600 to 800. More importantly, when price actions are backed by strong volumes, and the volumes for LIC, for example, on the monthly basis is around 6.5 to 7 crores as compared to an average which is 2.5 crores. So 4x, 3x, 4x volume jump up, and then a strong 200 point up move for the stock. That indicates that this is a fresh way of buying for LIC, and I strongly believe that such are the kind of triggers which leads the stock into a resurrective as well as a strong trending mode. So wouldn't be surprised that the stock scales past about the previous size of 900 plus and actually goes to 1000 plus levels also.
Even two-wheeler stocks last week actually belonged to Tata TVS Motors because of Ola Electric IPO talk, and even Ather is now gearing for an IPO. It's taking a bit of a knock today. But Bajaj has actually come back. Nuresh, look at Bajaj Auto, almost 6,500, knocking that level. Is it a breakout? Do you think it will catch up to TVS this week?
So the stock has been in a strong uptrend for the last 3-4 months, and another fresh new all-time high. So momentum is strong. It's just a little overbought. So at current levels, how long can it continue? It's tough to call, but the momentum is pretty strong. So one could keep a trailing stop loss and ride on to the move. That's the only way we've seen one could hold on to TVS Motors, and very similar chart here with Bajaj Auto. So hold on to the stock. Will it catch up? Difficult to say.
This PVR as well, which has jumped up quite nicely today, almost a 2.5 or over 2.5% move is what the stock is seeing. It's back above that 1800 mark. Exide is the other one, like Ajay also was highlighting. That's looking very, very smart indeed. A 305 price point there. And then, of course, Indiabulls housing as well continues its uptake. It's pretty much sitting around the highest point of the day. 232 thereabouts is where it's at. And I'm just quoting the F&O prices here. But look what's happening in the entire defense pack. Not just the railway names like IRCTC, BHEL has made a fresh move. There's HAL, which is higher by about 2%. And I can go on with that list. A couple of these infra cap good plays as well, looking very smart. And BHEL as well has made a decent move of about 2%. Sudip, are you willing to bet on BHEL, or would you say stick by with L&T?
No, absolutely not. I in fact have been recommending investors to exit BHEL, book profit and exit. I think I've seen this movie many times. Over the last 30 years, BHEL at different points of time have got the market excited, and every time it has ended badly. Sorry, I'm being a bit harsh, but getting orders is not equal to profitability and profitable growth. Yes, they have been getting orders because NTPC is under some kind of compulsion to grow the thermal volume. There is a demand, and they are placing orders for fresh boilers, which obviously BHEL is getting. But the implementation track record of BHEL has been terrible over the years. So yes, I don't think the current valuation of BHEL is justified based on its past track record. Yes, they have a strong order book now, but I would rather wait and watch. Let them implement some of it, in a profitable and timely manner. Then I will necessarily buy at a higher value, but not. I'm not buying now.
Sudeep, where do you see very good margin of safety in this kind of a market?
Well, I think there are a few stocks where there is huge margin of safety, and these are probably all in the large cap. And we know the rationale for that. FII money is coming in a big way. Last couple of weeks, I think $3.5 billion have come already of FII money, and that flow is expected to continue. Maybe there will be profit booking here and there, but this FII money coming in will be a secular trend, and a lot of it will get absorbed in the large cap. So large cap is a safe place to be in, and there are a few stocks I think which hasn't moved up. Of course, today Reliance has moved up a bit, but otherwise I think Reliance deserves a much better valuation from where it is at this stage. There is tremendous value unlocking potential in Reliance over the next few quarters or maybe couple of years. So for a long-term investor, Reliance definitely provides a significant safe investment bet. The other stock where I am very bullish, and I have been bullish for quite some time, is Larsen & Toubro. I think Aisha was just referring to Larsen & Toubro while asking the question about BHEL. I think one has to understand what's happening in L&T and take a calculated risk. 1/3 of the order book of L&T is now coming from international markets. Saudi Arabia is one market where they are almost the leader as far as their construction space is concerned. And these are very high margin contracts. And the low margin business of L&T is getting phased out in a structured and systematic manner. So maybe in a couple of quarters, we'll start seeing a different margin profile for L&T. So it has moved up over the last 1.5 years. But I think still there is a long way to go for L&T from current levels. Of course, the technology businesses, subsidiaries also will pick up based on what's happening as far as expectation of US demand coming back, global demand coming back. The other subsidiaries and unrelated businesses, wherever there are unrelated assets, they are getting rid of it and improving the working capital scenario. So L&T can be a very good long-term bet from investors' point of view.
Sudeep, 3 IPOs open today: Muthoot Microfinance, Moti Sons Jewelers, Suraj Estate Developers. Out of this, of course, it's Moti Sons which has seen the maximum participation or subscription up until now. And then, of course, there's Inox India as well. In its day 3, the total subscription is at about at 38.5 times. Any of these new IPOs which interest you?
Well, I think Muthoot Microfinance is one IPO which we like. Microfinance as a business is going through an upswing, and we believe that next couple of years should be extremely good for the microfinance business. The challenges as far as asset quality post-COVID, I think, are behind microfinance business, and they are getting into a massive growth phase. And that applies to pretty much all the well-managed microfinance companies. So under the circumstances, Muthoot Microfinance, which have been running a good book, and they have a decent margin profile. They may not be industry leader in terms of margin profile and other things like that, but they run a pretty decent book. Valuation is not cheap, but from an investor's point of view who have 1 year plus time horizon, I think this is a good IPO to look at. Of course, one has to see how much allotment they get and things like that. If on listing it quotes around the same level where they are doing the IPO, I think again it will be a good opportunity to buy as well on listing.
Sudeep, have you recently looked at some of the rating agency stocks? CARE and CRISIL are getting disproportionate work right now compared to some quarters back because of a lot of business activity happening. A lot of listed companies are getting paper and borrowing rated higher or rating changes happening. This volume of works usually in the upcycle in an economy actually happens. Would you, any of them, between the two, which one is your favorite?
Yeah, you're absolutely right. This trend is 100% correct. And if you are expecting a massive GDP growth on a continuous basis for the next 5-10 years, I think these are the rating agencies will definitely benefit. CRISIL is my personal favorite, and CRISIL can definitely be looked at. That doesn't mean that CARE cannot be bought. CARE also can be bought. Actually, both can be bought with a 1 year plus time horizon in mind. The valuations are not cheap, but one has to remember that you are buying into a good quality stock which is going to give good quality growth over the next 3-5 years.
Again, on some of these rating agency stocks. In the meantime, here's an ET Now exclusive, or another one I should say, that we're learning from reliable sources that Tata Consumer is set to be buying controlling stake in Ching's Secret parent company. Let me take it across to my colleague Cheryl D'Souza and get in more details on what she's picking up of this latest acquisition, which could be in the fray.
Yes, indeed, a very big M&A brewing in the consumer space. And if all of us love eating desi Chinese, then I'm sure that all of us know Ching's Secret. And we all know that there were talks underway for a while now where Capital Foods, which is the parent company of Ching's Secret, that was looking to actually look at the sale of the company. Remember, there are three promoters of three owners of Capital Foods, and they are namely, one is the founder and the chairman, that's Ajay Gupta. You have Invest Group as well as General Atlantic. All of them were looking to actually look at offloading their stake in the company. And what we are picking up from the sources right now, that indeed it is the Tatas that have emerged as the front runner for buying the controlling stake in Capital Foods. So yes, that's the big exclusive details that we are picking up from our sources, is the fact that Tata Consumer is now the front runner to actually bag Capital Foods and bring that particular company into its kitty. Remember, the Tata Consumer is aiming to be a complete FMCG company, and this sort of a foray will actually boost the kind of product mix that Tata Consumer already actually has. Given the fact that what we are also picking up from the sources is the fact the deal is valued around $1 billion or so, and the fact that the current management of Capital Foods will be on board for the next 3 years. What our sources are also telling us is the fact that this particular deal will be completed by March. So that's a big exclusive detail that we are getting out from our sources, is the fact that the Tatas have emerged as a front runner to buy the controlling stake in Capital Foods. The current board will stay on actually managing the company for the next 3 years. Deal is expected to end or be completed by March. And also, what we also done is that we did write to Tata Consumer to get their response on this particular deal, and they've said that they do not comment on market speculation. So that's the big exclusive that we are getting, is the fact that Tatas have indeed emerged as a front runner to buy controlling stake in Capital Foods.
All right, so this will be interesting. And do you like
you wanted to just say something,
yeah,
that's why I said might as well.
Yeah, I actually wanted to talk to Sudeep on this, because this would be a very interesting one. Ching is a household name, right? $1 billion brand. What could it do to Tata Consumer's portfolio is something I wanted to, Sudeep, what do you think? Ching's Secret, it's no secret that it's such an amazing brand, and all of us have tried it at home, the noodles, the sauces, etc. But can it add spice to Tata Consumer's portfolio?
Absolutely, definitely it will add spice to Tata Consumer's portfolio. They have been acquiring, they have been looking at this acquisition for some time, and I think this is going to be a good acquisition. The continuance of the management team, as your colleague was mentioning, I think would be icing on the cake. Sometimes these acquisitions become a little disruptive when the management team changes overnight and the strategies change overnight. I think if this continuation is good for Tata Consumer. Overall, on Tata Consumer, I would like to say that I think, if you look at this company, this is work in progress. There are a lot of things happening. This is becoming a house of brands kind of a strategy. They are trying to acquire multiple things. We all know that they were at some stage of acquiring, the Bisleri, the mineral water business that didn't go through. So I think there are a lot of things they're trying to do and scale up rapidly through an acquisition as well as organic as well as inorganic. We have to see, wait and watch. Finally, of course, this is a good acquisition if they conclude it. But as far as Tata Consumer share price and the business is concerned, I think I will adopt a wait and watch policy.
A wait and watch on Tata Consumer and how this acquisition that we understand they're in the works with of Ching Secret actually pans out for them. But let's quickly get a sense of what the dealing room chatter as well is and what are the stocks which are being talked about. Sharat?
Well, yes, strong volumes coming in for JK Tyres, and the stock itself has hit its lifetime high levels as well. And the buzz in the street is that what we are getting from the dealers is, importantly, there is a strong interest coming in from the domestic mutual funds as well as the portfolio management houses. Now, this QIP issue is expected to come off roughly 500 odd crore rupees, and last week itself the company had met institutional investors in Singapore. Apart from this, also recently the company in its outlook had stated that they would be focusing in 3 areas going ahead, and the first one would be premiumization. Apart from this, export and increasing the distribution network would be something to actually focus on. Now, apart from this, there are domestic brokerages also like MK and DAM Capital, which still have a buy rating on the stock, and the target price is ranging between 400 to 415 rupees per share.
JK Tyres, that's the one which is on the dealing room chatter this afternoon. Stock holding up very smartly, about an 11% uptick at the highest point in the day. On that note, let me also get in some BTST trading ideas as well, if at all. Kunal, anything on your list?
So I'll go with Indiabulls Housing as the first pick. It's the buy with 260 as a target, stop loss at 215. And Hindustan Copper is the other name which has also sprung up towards a breakout. So I think trading above 195, the last I had seen for the stock, would look out for a shorter term target of 206, stop loss at 188.
Right. Naresh, what about your buy today, sell tomorrow ideas?
So first would be a buy on Granules with a stop loss at 390 and a target price of 415. Second would be a buy on PVR Inox with a stop loss at 1800 and a target price of 1860.
All right. In fact, let's scratch that point on metals a little more. Sudip, there is one section of these PSU metal counters, SAIL, Hindustan Copper, NMDC, most are doing okay. And the other side is aluminum, which most of the guys are saying globally may start outperforming all the other metal counters. So in an environment when the dollar index is falling, where would you bet on more convincingly on among the metal names?
Well, I think we have to look at it in 2 ways. One is if you are a safe investor. If you don't want to take an aggressive bet, I think some of the PSU metal companies, particularly NMDC, has been our favorite for a very, very long time. I think one can look at NMDC or even MOIL. Both are good bets at current level for 1 year kind of hold. As far as the little larger universe and for an aggressive investor, I would recommend that they can look at getting into Vedanta as well. There are enough challenges. There's a huge debt issue at the holding company level. Some businesses they may exit some of the businesses, ancillary businesses, and governance has always been a bit of a question mark there. But as things stand today, with the metal cycle turning around and the price, considering the price where it is, I think this is one stock where an aggressive investor can look at taking a bet for some time. Specifically on aluminium, I think one can look at Hindalco, but one has to remember that these trends change very quickly. So Hindalco is a good bet, but we have to keep monitoring the counter very, very carefully.
Sudeep, great to have you on the show. We'll let you go on that note. But Ajay, it's quite interesting, right, that these bottom-up turnaround stories is now what the market is betting on, be it